So I am going to kind of answer that question. Thank you, Alex, for that lovely introduction. Around how I would summarize what I'm going to talk about today is it a case of build it and they will come? Like, is it a case of build the hotel rooms and they will come? Is it fact or fiction? Or as I described it the other day to colleagues, is it myth or magic? So let's dive right into that. And it's not necessarily just fact or fiction for this part of the world. This is where I'm going to spend most of my time. But I'm going to look at the globe first, the 36,000-foot view, if you will. This is something we've been noodling for a little while, and honestly, I am so over 2019 comparisons. Like, it's done, I'm over it, we're 6 years later, enough already. But I thought this is quite a cool story, so I've kind of run with it, okay? So humour me for a second. So as you can see, all world regions, or all kind of global sub-regions, they don't have an equal contribution to demand. And if you were to look at demand just from a global standpoint, and I've broken it up here into these 8 different pillars, but from a global standpoint, it's growing by about 1.3% year over year. Now, if you were to eliminate the US and China, those two really big powerhouses, it's growing by 2.6%. But then when you look at the various different silos, those individual, 7, I can't count, 7 different silos, you'll see there's one silo that stands out and stands really, really strong, and that's that 34% that you're seeing inbound into the GCC. So 34% more demand coming into the GCC today than there was at the same point in 2019. And not to forget Africa, because that's also growing. A slightly different place in the recovery cycle, slightly different place in the growth cycle, and that's sitting at about 6%. And then you'll see Asia sitting over on your far left-hand side. But Europe kind of just on the cusp, the Americas just on the cusp, and actually if you were to extrapolate the US out of that, that Americas number would drop down ever so slightly below that horizontal line, which of course is where everyone wants to be beyond the horizontal line. So if we look at that in a little bit more detail, GCC takes the third spot, Africa takes the top spot. Now Africa coming from a very, very different base, the GCC. GCC coming off a much larger base, of course. So GCC sitting year over year at about 4.2%, Africa in excess of 5%. More on that in just a few moments. And then your global demand, like I referenced just a few moments ago. And then a couple of the more challenging children, we'll call them. The US, Mexico, France is a little bit of an unfair comparison given that Paris hosted Olympics last year, so we'll definitely see that edging into positive territory in the not too distant future. So given that demand is increasing, it is no surprise then to see that air travel is growing as well. And you've seen some of the stats from Olivier this morning with forward keys. And as we came through kind of 2022, that whole recovery piece into 23, the first normal year in 24, and of course where we are today in 2025. So it's more than doubled where we were back, again, pre-pandemic. So people have never traveled more. And certainly if I think of all the flights, this is I think my 3rd trip out here in the last 6 weeks. And if I think of all the flights I've been, every single flight has been absolutely packed coming out of London. And that's British Airways. So you can imagine what Emirates are doing. It's probably standing room only on Emirates. And if we look at breaking that down from an international standpoint, the darker green is what we're looking at for 2026, and then the 2025 is in the grey. So we've a lot of positivity to look forward to into 2026 as well. So the rest of Asia, as you've very eloquently described it, which is everything Asia not named below. The Australia piece, the GCC piece there I've highlighted. Let's jump down a little bit, and also the Africa piece. So really the only market that we expect to see demand decline significantly, so almost 6.5% this year, is the US piece. Most of that driven by a decline in inbound Canadians and visitors from Mexico come into the US. So let's see how that one plays out. Now, one of the other KPIs that's quite favourable when it comes to growing demand is that supply growth is starting to slow globally. It's a whole other ball game when we get to the GCC. We'll come to that in a second. But globally, we're sitting at about 1.3%. Remember I said demand was growing by 2.6? Supply is growing by 1.3. That's exactly the kind of equilibrium we want to see. Supply grows, demand more than meets that supply that's inbound. That's kind of the perfect equilibrium for the dynamic between supply and demand. So with all of that in mind, this is no shock to anybody. Occupancy is growing, continues to grow globally. Average rate is also growing. What might be surprising to you, and it certainly was surprising to us as we started to see this trend evolve, was that average rate is still the key contributor to the RevPAR growth. So still more on the rate side of things than it is on occupancy. We kind of thought it'd be more the 50-50 by this point in time, but still it's positive, so we'll take it, whether it's more people coming into our hotels or whether it's the fact they're paying a higher rate. But we want, of course, both of those KPIs contributing. So does the equation fall through when hold true, should I say? Is it myth or magic when it comes to the GCC? Well, I think you all know the answer to that, or you'd probably all be packing your bags and heading for DXB. It's definitely magic when it comes to the GCC. And if we look at back 2022, right through to year-to-date October, and that equilibrium, with the exception of 22, which is that kind of balance of recovery coming out of the COVID period, 23, 24, 25, 10 to 12% increase in supply, and demand surpassed that 23, 24, and where we're sitting in 25. Now remember this for my second or third last slide, because I'm going to show you what the future looks like for exactly this viewpoint in a moment. This is how supply has evolved. The little tower blocks is your year-to-date October, rooms that opened year-to-date October. Appreciate we're getting towards the end of the year then, so the vast majority tend to be open. The trend lines you see running through the sequence is the full opening capacity. So limited new rooms have opened year-to-date 2025. There are more coming though. Certainly I know of 400 rooms that opened in the marina since I was here 10 days ago. And I think another 600 to come. And if you break that down, the asset class that's still growing the fastest is that luxury asset class. So probably Dubai especially, although looking at this full GCC number, huge contribution of luxury supply in the Dubai market. That's how it started 20 years ago. That's how it continued to evolve as we went through the sequence. Kind of started with about 7% of the luxury of new supply was in the luxury segment. That evolved kind of 10 years ago to be about 47%, and it's now about a third of all the supply if you just were to extrapolate Dubai out of this. The decline in mid-market is always something that kind of I see some perplexed faces on. That is not because we've had closures, it's a lot of rebranding, it's repositioning of assets, it's also some of the renovation projects that mean properties have moved into different asset classes. And then if we look from the RevPAR standpoint on the left-hand side, I've spoken to many of you over this morning and over the last few hours, and even yesterday as well. I think some of you have even said stuff like you've made budget already for the year. We didn't predict that. I'll get to the forecast in a second. 8.3% year-to-date October. You guys are, by the way, the first people to see our year-to-date October data. We've not shown this anywhere in the world. We only processed it last week. But you'll see it was a bit of a slow start to the year. Q1, 6.5%, mostly on the rate side of things. We take that all day long, by the way. Q2 ramps up again, Q3 further, and October was just an absolute cracker. And I believe November is going to follow suit really, really close behind. Now, surprising to some of you that Oman tops the table. It's Oman's time now. So Oman didn't have the kind of recovery that the UAE had and that Saudi Arabia had over the last 2.5, even 3 years. It took a little bit longer. In true Omani culture and in true style of Oman, they just took their time, but it's definitely borne fruit now, well in excess of that 20% RevPAR growth. Kuwait, a similar position, although as you'll see, being driven principally by occupancy, less so by rate. And then, of course, if we look at the top performers, Kuwait has knocked Medina off the second spot. So for pretty much, I think it was 8 of the last 10 months, it was Riyadh, Medina, Mecca, Dubai, Kuwait. So Kuwait has just snuck in there into the second spot year-to-date October. But Saudi Arabia taking 3 of the top 5 ADR spots, Riyadh achieving an average rate well in excess of the $200 mark. So what's driving? What or who, should I say, is driving some of this demand? This is some of the new stuff that Alex referenced, and this I did eliminate yesterday. You're going to see this again later on today. We'll tell you why shortly. So Coldplay came to town, came to many towns around the world. It came to Abu Dhabi town for sure. It increased RevPAR. Chris Martin, single-handedly, 136% increase in RevPAR. Thank you, Coldplay. Yes, Chris, please return. So that was how he kicked things off in January. I very graciously gave the 4 tickets that I did manage to get to Philip. He then buggered off and left me emceeing tomorrow. Arab Health and Gulf Food, close follow behind. as we went through kind of January into the February period. But note how it is Gulf food is a premium of about 40% over Arab Health. So both incredibly successful events that roll into Dubai in the kind of January, mid to late January and into the February period. But also very interesting that Gulf food drives that really strong premium, hovering on the edge of 1,200 dirhams RevPAR. And if we look at Gulf food, just the premium over the other days in February when Gulf food does not happen, it's a whopper of a premium. So 55% lift. If you just extrapolate the Gulf food dates and look at the rest of February, some of that, of course, is being driven by Europe and half-term holidays. So we're seeing some of the inbound that I think Amy spoke about just before as well. Live Golf is an interesting one. I'm a big DP World Tour fan, so I have kind of a love-hate relationship with Live Golf, but I'm curious about it as well. And Live Golf took place in Riyadh, and it's one of those that, they're always looking for the Shane Lowrys and the Rory McIlroys. Maybe that's just me. But there is a little kind of a grade line that you can't see, but where you see that peak over the kind of 8th, 9th of February for occupancy. Interestingly, it was the mid-scale and economy asset classes that grew the greatest amount of occupancy over the Live Golf period. All grew, of course. You'll see 20 to 25%. And then it's actually in the first 2 days of the tournament were much softer. Kind of took a little while for it to pick up and to get into that kind of 60, 70%, but quite short-lived. So a short-lived period, so probably more time for that to bed in. It will definitely come, but just a little bit more time for it to bed in Riyadh. IDEX, one could argue, not a huge story when you look at occupancy. It's always kind of 90, 95% every other year, of course. So 2025 versus 2023. We're also looking at 19 and 17 for some comparables. But this is where it all actually rocks and rolls. So day one of IDEX in Abu Dhabi drove an average rate 45% higher than day one last year. So talk about name your price. And as you'll see there, in excess of 1,600 dirham average rate for IDEX. So real star performance. And if you compare and contrast, ADR grew 43% 2025 versus 2023. So yes, IDEX, please come back again in 2027. If you could make it annual, that'd be wonderful. Maybe every year we can have it come in. Am I getting greedy yet? And then, of course, on to Formula One. I'm lobbying, I think Brian is as well, lobbying Mona to push the conference to a different date. I'd suggest after Doha Grand Prix, because then I could go to Doha Grand Prix and then come here. So if we look at kind of the Grand Prix, 4 races. I hear there's rumour now as well of maybe a 5th race. I have to ask you guys whether that's a true rumour. There's going to be a 5th destination, I believe, as of 2027 or 2028. But you'll see Bahrain actually dropped some occupancy this year. Hold that thought for a second. Jeddah grew occupancy by 5 percentage points. So Bahrain back about 7 percentage points in occupancy, Jeddah ahead. But guess what happened on rate? The complete opposite. So Bahrain ADR grew a whole $12. And in case you're wondering how much Jeddah was back, it was back $8 on last year. So a market that's growing exponentially. So the pie continuing to evolve. So very, very normal behaviour to see that impact on Jeddah as we bed in new hotels. GITEX more recently, bang on the money with occupancy. Great place to be considering the market continues to grow supply. And then if we look at rate though, so GITEX period grew 120 dirhams. The rest of the month of October grew 100 dirhams. I don't think I've ever known so many people, especially in the UK, coming into Dubai over half term this year either. And it doesn't have to be just events. It can also be like, kind of those formal gatherings. This is Saudi school holidays into Doha. Drive-to destination. I have it on good authority. Saudi school holiday this week. I have it on good authorities. There was the usual line at the border the past couple of days coming into Doha. So we're expecting something very similar. But definitely capitalising on performance. Where they were in 23, about the 80% mark during Saudi school holidays. Closer to the 90% mark. Average rate grew. You can see it's a little bit clearer when we look at year over year from the trend line. And again, from the average rate perspective. So let's see if we can jump that again as we go through the remainder of this year. Arab Cup has not happened yet, sticking with Doha, but I think we can learn a lot from what happened in 2021. I think it's fair to say the numbers speak for themselves. It was all about growth in rate and a really nice cushion of about 20 to 22% occupancy. And then Soundstorm, not my jam, but Philip and Costas enjoyed it. With Middle East, in the middle of the Saudi desert, I'm still super curious. I think it does take a little bit of time for those kind of events to bed in. If we look at that in a bit more detail, occupancy did grow about 10 percentage points compared to the inaugural event back in 2019. An average rate every day exceeded 900 Saudi riyals. Just very briefly, a glimpse at Africa. Africa, a market that's still very much in kind of recovery stroke growth mode, depending on where you are on the African continent. But you'll see a clean sweep of growth along the far right-hand side, year to date October. So demand is most certainly back for Africa. And if we look around the country, we're sitting at least 2/3, pretty much all markets. This is just a smattering of the markets, not all, or it becomes incredibly busy and you can't really figure anything out. Take Sharm, for example, 77% occupancy year to date October. So it's ranging from a 36 down in Gaborone right up to the 77% in Sharm, but lots of kind of mid-60s as well. And for the most part, it is growth year over year, 10 months of this year versus the 10 months of last year. And from an average rate standpoint, this is a local currency comparison, otherwise you need very large bubbles for 3 and 4 digits with devaluation of numerous currencies, but pretty positive, especially in those high leisure demand markets, with the base, of course, being led by the Seychelles, Mauritius, Marrakesh. You'll see Cairo there in the middle. So if we roll on before the music gets really loud and Alex has to throw me off and look at where the road ahead leads us, he would not relish that. 2.4 million rooms in the pipeline. Not all of those will come to fruition. Different plans will be made, capital will not be available, etc. But if they were to, 27% increase in supply, 70,000 under construction. Those rooms are announced rooms, very, very important, because we often get questioned about it being quite a low ball number. Unsurprisingly, about if all of those came to fruition in Saudi would grow by almost 60% and another 11% in the UAE. Cairo, the standout market in Africa, with a potential to grow 60%. Forecast shifts significantly. Higher supply with possibly a little bit of a lower demand. This is part of what the challenges are and the opportunities in Saudi, which results in this forecast. More forecast in 10 days' time, so please go to product to get your November forecast. Thank you.